Morning, Bill here with the Metals Minute. Today is May 25th, 2022. Well, we have gold and silver both up for the week, 3% apiece, and we have platinum and palladium flat for the week. Keep in mind today, when you see this video, you might see gold a little bit lower because there is selling pressure due to options expiry on a June 22nd gold contract that's up today. So we'll see some temporary selling pressure that's likely to bring gold down a little bit from that level. All the details are in the write-up for the metals prices for the week. Also keep in mind that gold continues to be up year to date. So it's one of the few assets that's actually higher than where it started the year. And that's been a good buoy to help support an overall portfolio. You know, a lot of times what people have traditionally done is a standard 60-40 stock bond portfolio. And there have been 4 times over the past 90 years when both stocks and bonds were negative for the year. And 2022 appears to be another one of those cases. And so it's important that we have precious metals to help buoy our portfolio against these sinking stock and bond markets. And not only that, but conditions are such that it appears that gold and silver will do well in the years ahead, not only this year. And one of those reasons is due to stagflation. We've been talking about it, we've been writing about it for the last year and a half. The conditions are now starting to be acknowledged by mainstream economists that the conditions for stagflation are upon us. And what that means is simply a time of stagnating economic growth, of either very low or even negative growth in the economy, combined with increasing prices or inflation. Inflation plus recession, in other words of saying that is inflation and stagnation, is where we get the word stagflation that was coined in the 1970s. And we see similar conditions now with even higher debt levels than what existed then. So let's talk about what's happening in the energy markets. You'll notice that oil is not at a record high, but fuel prices are. The price for diesel is at a record high, gasoline is at or near record highs, and meanwhile the oil price is not. The reason that we have record fuel prices while oil is off from its highs is because we've been exporting fuel that we used to import as a nation. So for many years we would receive ships full of diesel into our Atlantic ports, and that would be offloaded for the use of American trucking companies, American farmers, and anybody that used diesel. We always made sure we had enough to keep our economy humming along. Now we're taking some of those same ships and we're exporting the diesel. We're sending it to other places, and that's why our diesel costs here have been rising. And the argument's being made, well, those people are our friends and they're suffering more than we are. Nevertheless, that's why we have record fuel prices, is because we're sending our fuel to other places. Now, the reason I mention that is a similar thing is preparing to happen in the natural gas market. We've seen prices spike in Europe for natural gas, and it has affected their whole economy. And to put it in terms we might be able to better understand, it would be like what it would be if we had $300 per barrel oil prices here in the United States. The level of gas prices in Europe would be similar to if we had $300 oil. And because we have recently, the current administration has recently signed contracts agreeing to export American natural gas, we're going to see the surplus of American gas that has kept our natural gas prices relatively low for many years. In fact, most all of our history, we have been on an island, so to speak, in terms of being protected from swings in the price of natural gas around the world. We've always been able to have low gas prices, relatively speaking. That may be going away in the coming months. And so then we could see Americans competing with everyone else in the world for the same gas, because we're becoming a net exporter, and that will cause our prices to go to similar levels of what they're seeing in Europe and across Asia. So be prepared for that, that higher gas prices will continue to cause inflation. It will undergird inflation the same way that diesel undergirds inflation. Everything that's shipped, and if you plan to heat your homes in the coming winter, be prepared for higher gas prices. And this will affect precious metals, because resources are needed to mine the metals and refine the metals. And that has always acted as a floor underneath metals prices, which is another reason why we continue to see them moving higher going forward from here. Thanks a lot for tuning in. We'll see you again later this week. Take care.